Well, I think we've got an oversupply right now. We've got a meal issue in terms of we've got not enough domestic use to encounter some of the overall supply demand fundamentals on the soybean meal side. I think from the meal side specifically, we're going to have to find an avenue to export meal. We know with the expanded crush that's coming on from the soybean processing side, we're going to have more meal that we can use domestically. So I think we have to be competitive on the export side. That means competing with Argentina, which is the largest exporter of meal. So price is going to be a big function of whether or not we can compete on the export side. So if you look back on meal prices, and that corresponds pretty closely with when Argentina's new president came online there in mid-November, and his policies, or at least what he's announced so far, is he's going to be much more farmer-friendly in terms of exporting more product, right? So I think that's where the meal market continues to battle, is trying to figure out if we can be competitive on the export side. Soybean oil side has probably been one of the most disappointing markets that we've seen, right? Because the soybean crush side and the expansion is driven by the soybean oil market and the perceived or expected increase in usage, right? But what we've seen on the oil side, at least the bean oil side, is the substitutability of other products that can be used in terms of renewable diesel, biodiesel, and those are animal fats and used cooking oil. We continue to see China importing, or they're exporting to us and importing a large amount of used cooking oil used as a substitute in the renewable diesel piece. So politics continue to be an important part of that, Stu. So we continue to watch what the Biden administration has in terms of biofuel mandates, and that's going to be increasingly important as we continue to move forward. Because with the crush plants that we've already got announced, right, we're going to have to figure out what to do with all the products.
We seem to be crushing more and more every month. There's a new record on crush announced by national oilseed processors every month.
Yeah, and I think we got to take that a little bit for a grain of salt, just because we continue to add new plants, right? Especially from the NOPA side, which represents about 95% of the crush industry, right? As we continue to have new crush plants come online, those records are going to continue to be broken. So we're going to continue to see that increase, especially with another slew of plants expected to open up here in 2024.
Is there any profitability for those plants in crushing more beans?
Yeah, they're making money right now, not nearly what they were making here the last 2.5 years when crush margins were phenomenal. So Central Illinois crush margins on the cash side, roughly $1.25 a bushel. So still profitable, but down from $3-4 bushels that we saw the last couple years. As we move forward, though, it looks like board crush margins, which kind of anticipate what crush margins are going to look like moving forward, continue to decrease more in the 70 to 80 cent range. So still profitable, but not nearly the profitability that they've seen the last couple years.
You mentioned politics, kind of driving biofuels, and that's been part of it. Could that suddenly turn around if somebody else gets in the White House?
Well, I think you always have to take some of these mandates or biofuel policies a little bit with a grain of salt, because the political aspect of it is pretty hard to predict, right? So it would be hard to know exactly what a change in the White House would mean moving forward. But obviously, the Biden administration has been very pro biofuels, right? So that's helped expand or drive a lot of this expansion. So I think we have to be careful trusting anything on the political side moving forward. But what we have seen, though, at least on the biofuel side, or the soybean crush side, is we've seen a lot of investment from a lot of major players in the oil side, Chevrons, Marathons. So that typically means you would assume, right, that some of these crush margins are going to continue to get built, just because there is some pretty strong money behind them.